you have to remember there's a lot of different types of taxes, customs, sales taxes, things of that nature, personal property taxes, real estate taxes, things of that. Most consumers, though, don't deal with the excise taxes or the sales taxes or the withholding taxes, things like that. The IRS debt, they are dischargeable, but there's a bunch of different rules that apply to it. The first rule being generally that the tax return that generated the liability has to have been due for at least 3 years. You count the due date from the date that the return was due if it was timely filed, and if there was an extension, remember that'll run to October 15th, 16th, or 17th, and you look at 3 years from that time. If the 3-year rule is met, then they're generally dischargeable unless you've got fraud or something like that involved. If you've got a tax return that was not timely filed, it's actually kind of odd right now. The 10th Circuit, as well as all of the other circuits, other than the 8th Circuit, which is Missouri, and remember the 10th Circuit is Kansas, those circuits have ruled that if the tax return is even filed 1 day late, then it is never dischargeable. The 8th Circuit is actually still follows the rule that even if it was filed late, if the debtor filed the return and the return has been on file for more than 2 years, then, of course, assuming you don't have fraud or something like that, then they are in fact dischargeable. But in those instances, you have to look at when the tax return was processed by the IRS, not the deadline. For example, if you're looking at the 3-year rule and somebody files their tax return in February, it's considered due April 15th or 16th, 17th, however the weekend falls. So that's the actual due date and the date you count by, not by the date that the return was filed or processed. But if the return is filed late, you have to go by the processing date, and that can be several months after it was actually filed. Typically, when we have cases like that, I have my clients go out and you can go to www.irs.gov and you can get what are called transcripts. There's all different types of transcripts. You can get the transcripts for the W-2s or the tax return itself. But in situations like that, we look for what's called an account transcript. In the account transcript, it'll tell how much is owed, penalties, interest, things like that. But it gives us the dates that are associated with that return, when it was filed, when it was processed, whether it was timely filed. If you know how to read the codes, it'll actually tell you whether there's fraud involved, things like that. And with those, you can pretty much tell fairly quickly whether the tax liability is going to be dischargeable or not.